Everyone! Welcome back to our channel iNewsU. Today, we've got some fascinating news about the U.S. housing market and why buying a house is still financially beneficial, even with skyrocketing prices and interest rates. So, let's dive right in. Getting into the U.S. housing market has become more challenging, but for those who have successfully entered, the benefits have been enormous. Experts have always touted real estate as a solid investment, especially during times of high inflation. Recent data from the Federal Reserve reveals a staggering 44% increase in the median value of houses between 2019 and 2022. Why is real estate often considered a better investment than stocks? Well, even though the S&P 500 index rose about 32% during the same period, real estate tends to retain its value better during inflationary periods. The volatility of stocks, linked to factors like corporate profits and economic outlook, makes real estate an attractive and more stable option. However, the surge in home values has contributed to a growing wealth gap. The housing market has become a significant contributor to wealth inequality, with the median net worth of U.S. homeowners reaching $396,000 compared to $10,000 for renters at the end of 2022. Despite all-time high prices and two-decade high mortgage rates, financial experts are advising clients to consider buying a home. But why now? Jason Abradovich, Chief Investment Officer at New American Funding, explains that if mortgage rates decrease, prices are likely to rise in response. Abradovich points out that the current interest rates, though high, are still lower than those in 1980 when the annual rate of inflation was over 14% and mortgage rates topped 16%. Over the past 40 years, interest rates have been on a downward trend, boosting real estate values. Lower interest rates are inevitable, according to Abradovich, as the Fed recognizes the need for economic growth. When rates decrease, the ability to refinance at a lower rate becomes a reality, potentially driving prices up again. So, waiting might not be the best strategy for those who can afford to buy now. Abradovich emphasizes that if you rent, the cost will probably always go up, making buying a home a more stable and potentially lucrative financial decision. Both Abradovich and Jamie Batmer, Chief Investment Officer at Creative Planning, highlight the role of homeownership in long-term finances. A home becomes a kind of forced retirement savings account, with each mortgage payment contributing to equity. Over time, rising home values enable homeowners to leverage their investment through home equity loans or borrowing against the property. Now, let's delve deeper into the economic dynamics that make real estate a robust investment even in today's challenging market. Jamie Batmer, Chief Investment Officer at Creative Planning, emphasizes that even in a backdrop of solid growth and elevated inflation, real estate tends to outperform stocks and bonds. This resilience makes it a valuable asset in a diversified investment portfolio. The inflation-resistant nature of real estate has been a cornerstone of its appeal. In the past 2 years, we've witnessed an inflation spike, yet the median value of houses has surged by 44%. This not only showcases real estate's ability to weather economic storms, but also underscores its potential to outpace inflation, unlike some other investment avenues. Jason Abradovich sheds light on an interesting aspect of the current market, the perception that it's a bad time to buy due to high prices and interest rates. However, he counters this notion by pointing out that if mortgage rates decrease, home prices may likely rise. This dynamic suggests that waiting for a better market might not be the most strategic move for potential buyers. Reflecting on the historical context of interest rates, Abradovich draws parallels between the present and 1980, when inflation exceeded 14% and mortgage rates soared above 16%. The subsequent decades saw a consistent decline in interest rates, contributing to the increased value of real estate. This historical perspective provides insights into the cyclical nature of the housing market. Abradovich's assertion that lower interest rates are inevitable aligns with the Federal Reserve's recognition of their role in fostering economic growth. As rates decrease, the opportunity for homeowners to refinance at more favorable terms arises, potentially driving another surge in real estate prices. This cyclical pattern underscores the importance of timing in the real estate market. The comparison between renting and buying is a critical consideration for those navigating the current market landscape. Abradovich suggests that the cost of renting will likely continue to rise, making homeownership a more stable and financially sound option in the long run. Building on the concept of homeownership as a forced retirement savings account, it's essential to recognize the wealth-building potential inherent in owning a home. As homeowners make mortgage payments, they steadily accumulate equity, and over time, the appreciation of property values can provide avenues for leveraging this accumulated wealth through various financial instruments. The enduring American dream of homeownership, as highlighted by Batmer, remains a cornerstone of wealth creation for the average household. While external factors may contribute to market fluctuations, the long-term stability and growth potential of real estate make it a compelling choice for those looking to secure their financial future. In conclusion, today's exploration of the U.S. housing market underscores the enduring appeal of real estate as a formidable wealth-building tool. From its inflation-resistant nature and strategic considerations regarding interest rates to the comparison between renting and buying, the housing market continues to present opportunities for financial growth. The historical context of interest rates, coupled with the inevitability of their decline, adds a layer of complexity that savvy investors can leverage. Whether you're navigating the market for the first time or considering strategic moves, the key takeaway is that homeownership remains a potent force in shaping long-term financial well-being. So, as we navigate the dynamic landscape of real estate, remember the enduring American dream and the potential it holds for securing your financial future. Stay informed, make strategic decisions, and, as always, happy investing. If you found this information valuable, don't forget to like, share, and subscribe for more insights.